is going to be our webinar expert. She's going to be delivering. So without further ado, I'd like to introduce to you your presenter, Ms. Emily Polk. Emily has worked at the credit union for over 17 years, and she's currently the Home Equity Center manager. Emily likes to read, travel, and visit museums. Her favorite destinations are Europe, Mexico, and she just got back from Iceland. Emily is a proud wife and a mother of 2 teen daughters and 2 fur babies. Emily, I'll check in with you later, but for now, the floor is yours. Thank you so much for being here today.
Thanks, Yutel. Thanks for the introduction. Thank you, everyone, for joining us. I was looking at the Q&A to see where everyone's from, and it looks like all over the place. So it's really exciting to share some information about my favorite product at the credit union, our home equity loans. I'll just jump right in with our agenda. Because this is a presentation for, sort of an intro into home equities, we're going to take you through the whole thing, soup to nuts. We're going to start with some HELOC terminology. We'll go through that. We'll talk about how to pick the right product for your needs, the types of lines of credit we offer here, and some of the advantages and disadvantages of each. We'll then go into how you apply for the home equity line of credit. We try to make it very easy. And then once you apply, what documentation we're going to ask for. We'll go over that, and then how our process works. Once we've got the application, once we have your documents, how we get you to closing and get the funds to you that you applied for. And then, of course, we will have Q&A during the presentation as well. So lots to cover. I'll jump right in with that terminology. The number one, of course, is HELOC. It's why we're all here. Really just stands for Home Equity Line of Credit. What's lovely about the line of credit is it's a revolving line. So think about like a credit card or an unsecured line of credit. You have a limit, and you're able to borrow up to that limit. So you're only paying interest on the funds that you have outstanding at any point. So it gives you a nice low interest option for funds in case of emergency. If you're working on a long-term project, you're only pulling funds as needed. So HELOC just simply is home equity line of credit. Owner versus non-owner occupied. You'll hear that a lot. It determines your loan type. Basically, it's your primary residence versus a second home, rental home, investment property, something like that. Fixed rate is the interest rate. It's going to stay the same throughout the life of your loan. Variable is tied to the prime rate and can adjust through the life of your loan. We'll talk a little bit about amortization. It's the period in which a debt is reduced or paid off by regular payments. So the amortization period is a portion of the home equity line of credit. When we talk about a 510 or 515, which we'll get into later, that's the amortization period. An appraisal is the value of the home reflecting its condition, age, location, and features. An appraisal is something that is ordered through a third party. Equity, we'll talk about quite a bit. It's the current market value of your home minus any liens attached to the home. It's the available funds that you can borrow for a home equity loan. Draw is when you take funds from that line of credit. And combined loan to value is another factor in determining your rate. So the CLTV, combined loan to value, is going to be the value of the home and the percentage of that value that the first mortgage takes. So if you had $100,000 value on your home and you owed $50,000 on your mortgage, you would be at a 50% combined loan to value or CLTV. Okay, moving on to the next slide. I'm handing it back to Yutel here.
That is correct. Thank you again for everybody being here on the first time considering a home equity loan or the first time understanding some of the terms. So the question is, which state had the most home equity line of credits, HELOCs, loans in 2021 with American Airlines Federal Credit Union. A is Florida, B is Oklahoma, C is Texas, D is Arizona. So again, we appreciate Emily for you being here for the first time. Individuals considering a home equity. There's a lot in the market homes with equity available, and nowadays is probably one of the best times to do this. So the poll is going on right now, and we're getting a lot of participants on this. I'm going to assume, since I'm not the subject matter expert here, that probably the biggest state is the one with the most, Texas, but we'll see in a moment. We got about 4 more seconds for the answer, Emily, and the poll just closed. So Emily happens to be that 62% has agreed with me that Texas is the most state with the home equity line of credit, followed by Florida, Arizona. So what is the true answer, please?
You guys were right. It's Texas, followed by Florida and Arizona. We're lucky to have members all over the country, but we do get a lot of applications from Texas.
And we have those individuals on the webinar today happens to be when they sent where they're from. So that's good.
Nice.
Continue, please. Thank you.
Thanks so much, Butel. Okay, so we're going to talk a little bit about how to pick your home equity line of credit. There's a couple factors that go into your choice of product. The first one is the state that the property is located in. We do have a lot of loans in Texas, but Texas is very unique in a lot of ways, and one of them is home equity. So rules apply to the whole other country, and Texas has its own way of doing things. So state in which the property is located is the first thing to consider. Second, that primary residence versus non-owner occupied. We'll need to know that to help you choose the proper product. Then you'll want to look at the rates. Do you want to do a variable rate where your payment can change over time, or do you want a fixed rate? So you'll look at both of those and make a choice. The next thing you'll decide is the term of the loan. So on the fixed rate loans, they're all a 5-year draw with a 10 or 15-year amortization. So the draw period is the amount of time that you have to borrow those funds. So if you took a loan out today, a home equity line of credit, and it funded, you would have up until 2027 to take a draw and use those funds. Every time you take a draw on the loan, it re-amortizes it to your amortization period. So there's a 10 or a 15-year amortization. You would choose if you want those payments to be set over 10 years or over 15 years. The rate's a little better with the 10-year product. The payment is a little bit lower with the 15-year product. So something to take into consideration. The last piece would be your combined loan to value. This is not going to affect the product that you choose, but it will affect your rate. If the loan to value is under 80%, it's a more favorable rate than if it's between 80 and 90%. Will lend to a maximum of 90% CLTV. Okay, moving to the next slide. These are the types of loans that we offer. We've got the fixed rate HELOC, both Texas and non-Texas, for owner-occupied properties and non-owner occupied properties. The variable rate home equity lines of credit are only for owner-occupied properties. And we're going to delve into each one of those loan types in the following slides. So for owner-occupied homes that are not in Texas, fixed and variable rates again, you can borrow up to 90% of the value of your home, 90% CLTV, minus your first mortgage balance. Access to the funds outside of Texas is pretty flexible. You can access them through your branch, mobile banking, online banking, or we can send you convenience checks. And like all of our loans, there's no penalty for early payoff. Texas is unique with this. All of the non-Texas, well, actually, I misspoke. Texas is very particular with this. You can only have one home equity line of credit every 12 months. The maximum CLTV in Texas is 80%, not 90%, which is available outside of Texas. We cannot provide home equity line of credit checks due mostly to the minimum draw amount of $4,000. In Texas, you cannot take less than $4,000 out on your home equity loan each time you borrow. The request for the funds must be in person or in writing with a signature, but of course, again, there's no penalty for early payoff. We're going to move next to the non-owner occupied non-Texas loans, so anything outside of Texas. With no first mortgage, you can borrow up to 70% of the value, 70% CLTV. If you have a mortgage, we'll lend up to 60% CLTV. Funds access is very similar to the owner-occupied homes. You can access them through a variety of different ways. There is a fee for this loan type. It's $450, and it covers some of the additional expenses that are associated with this loan type. Because they're non-owner occupied homes, we do a more detailed inspection on them. There's also additional title fees that the $450 covers. The interest rate is fixed on this for the term of the loan, no penalty for early payoff. And the term on this, the draw period, again, is 5 years with a 10-year amortization. For the non-owner occupied Texas loans, again, no HELOC checks on these and a minimum draw amount of $4,000. The CLTV requirements that we shared on the non-Texas loans apply here too. So I have thrown a lot of information at you. I'm going to give it back to Butel for a moment for questions.
Thank you, Emily. Thank you again for being the subject matter expert at the first time considering a home equity. Yeah, we got a couple questions coming up, and they're coming through my inbox myself. Yeah, make sure you send all these through the all panelists. But the first one is, what is amortization?
Amortization, it's the period of time that you're paying the loan back. So if you have a 10-year amortization, your loan payments will be split into 120 payments.
Thank you so much. Again, being that it's the first time, and for those that are not only the first time, but at least getting to know this, why are Texas HELOC so unique?
So the Texas actually included HELOCs in the Texas Constitution. They have very specific rules here as to how to access the equity in your home. So it's not a credit union thing. The rules were actually established by the state.
Okay. We also have a, can you go from a variable rate to a fixed rate with no fees?
So most of our home equity loans do not incur fees. You can refinance your home equity loan at any time. You would just need to add $10,000 to the line. So there's not anything that we have in place to transition an existing loan from one product to another, but there is the potential always, if there's equity in the home, to refinance.
Okay. Can you give us an example of how to decide CLTV?
Sure. So let's say that you had your home was worth $200,000, and you wanted to take out a $50,000 home equity line of credit. So we would look at the $200,000 total. We would figure out what 80 or 90% is of that. Let's just say 80% for this example. So you have a total available equity of $160,000. So from that, you would subtract your first mortgage. Let's say it's $100,000. That leaves you with available equity to borrow of about $60,000. So that $50,000 loan amount would be well within reach.
Very nice, very detailed. Again, for those individuals being the first time considering this, or for those even that have had it in the past and were not clear, nice, simple, straight line example, very simple to follow. Thank you for that as well. This may sound silly, but again, there's no silly questions on this business. Variable rates, they will adjust not only up, will they adjust down, meaning the rate can go higher, but it can also go lower, correct?
Oh, yes, absolutely. We have a floor on our rates of 4%, so they won't ever go below that. But as the prime rate goes up and down, your variable rate would as well.
Is there a maximum that it will adjust to?
There is a cap as well. It's at 18%, but which is a shocking number on a mortgage. I get that. What you want to keep in mind is that this is tied to the prime rate. So you're set at a margin off of the prime rate. So prime is significant. I know it just changed 2 days ago. I think we're at 5.75.
I believe so, that's correct.
So if your margin was 1%, if rates adjusted to 5.75, your rate would go to 6.75. If prime dropped back down to 3.75, you would be at 4.75. So in order for your rate to go to 18%, the prime rate would have to be at 17%. So yes, there is a cap, but it's highly unlikely that we would get there.
Okay. Got one more question. For an individual, and I don't know if this pertains per state, if there's any difference. In this case, this individual resides in Virginia. What is the fee for the HELOC?
Virginia has a state tax. It's not one of the highest, but there is a state tax in Virginia. Your loan officer can give you exact numbers on what that would be. On states outside of Virginia, New York, Florida, states that have a state mortgage tax, we do pass that cost through to the member. But in general, the home equity process does not pass through any fees to the member. So we pull an automated value on your property. If we're able to pull it and it's sufficient, in most cases, we don't need an appraisal. We pay for the title work. So the pass-through cost to the member in most cases is zero. In states with a state mortgage tax or stamp fee, that is passed through to the member.
Okay. And the appraisal is, like they say, could be a drive-by, or it all depends on the property itself?
So we pull values based on recent sales through our title company. So we're just trying to get a good idea where the value of your property is, because we're not lending 100%. So there is a little wiggle room there. One thing that our automated valuations don't take into account is if you've done a lot of recent improvements, if your home is improved beyond some of your neighbors. It's looking at recent sales and basically a price per square foot comparison based on tax rolls. So if you did an addition that's not reflecting in the tax rolls, you may see your value come in lower, and at that point you may opt to do a full appraisal. But we do offer an initial valuation at no charge.
Thank you, Emily. These are great answers for these first-time individuals considering home equity, or those that had done it already, understanding it. For time's sake and to make certain that we're able to give you enough time to continue being so detailed, we'll give it back to you. That way we can continue.
Okay, wonderful. So we'll jump right back in with the advantages and disadvantages. So these are the advantages and disadvantages of a home equity versus a consumer loan, like a personal loan. So one of the advantages of the home equity is you can use the funds as needed. You're only paying interest on the funds that you borrow. We may offer a higher credit limit than on our personal loan home equity line of credit based on your available equity, of course. The rates on these are, it's a secured loan, so the rates are typically lower than on personal loans, and the payback period is extended. Ours is 10 to 15 years, so that will result in a lower payment overall. Some of the disadvantages are that you would have to reapply or requalify for the loan after the draw period if you want to continue to take advances. The turn time on these is pretty long. Personal loans can turn around in a few days. This is a full mortgage loan. The turnaround time is quite substantial on this. We've got 30 to 45 days. To be honest, right now, we've got a lot of applications. The turn time's even a little bit longer than that right now. We're averaging about 45 to 60 days on the home equity process. The documentation requirement is more with home equities. We're going to be asking you for documentation not only on your income, but on your home as well. So homeowner's insurance policy, mortgage statement, that type of thing. And the last piece that's, I guess, a disadvantage, but different than consumer loans, is we require a formal closing with a notary or an attorney. This is a mortgage loan. We are placing a deed on your home's title, so we keep it very legal and get everything notarized or attorney signed. So moving on to the next slide, we're going to talk about the home equity line of credit versus a mortgage refinance with cash out. We get this question a lot. So with the home equity line of credit, one of the advantages is that there's lower or no closing costs, and we touched on that briefly. There may be some based on your state, but they are always lower than doing a full mortgage refinance with cash out. The mortgage refinance closing costs do vary, typically range from 2 to 8% of the loan amount. On the HELOC, typically, historically, our interest rates have been slightly higher than the mortgage rate, and the amortization term is shorter than that of a mortgage. I will say we're in a really unusual rate scenario right now. I think for the first time ever, our HELOC rates are actually lower than our mortgage rates. So that doesn't apply so much right now, but historically it always has, and I would anticipate going forward at some point it will revert back to that. The amortization term piece of it, our loans are shorter on the home equity side. On the cash out mortgage side, you've got a term of 15 to 30 years. So the payment on the mortgage cash out side is typically significantly lower. On the home equity line of credit, this is a line of credit. So you're only paying interest on the balance of the loan at any given time. With the mortgage refinance with cash out, it's a closed-ended or fixed loan. So you're making even payments throughout the life of the loan. If you're not using the funds, you still have them and you're still paying interest on them. Okay, so now we're at poll question number 2. Viatel, I'll hand it back to you.
Thank you, Emily. Thanks again. People are getting their juices going and we're getting a lot of Q&A, but let's go to poll question 2. Which rate discounts, if any, apply to home equity line of credits? Select multiple ones if needed that will apply, that you know of, especially this is for those that are member owners already, and for those that are not, they will learn something new. Welcome aboard. A, direct deposit. B, loan loyalty. C, none. D. So Emily, I would say for those people that are doing this for the first time or they're not necessarily a member owner of the credit union yet, they may struggle a little bit knowing the differences of what they can take advantage of. But I'm certain that you and your knowledge expertise will let us know what is that can work. I'm going to say, and I could be totally wrong because I'm not a loan loyalty discount. But again, we'll see in a couple of seconds what are people letting us know that they think it is. All right,
Okay.
the poll closed out. So the majority of our guests today are saying that direct deposit should allow you to get a discount. That's 69% of them. And then we have another 46 that agree with me, loan loyalty. We have 38% that says welcome aboard. And then some mention another 15, none of the above apply for a discount on a home equity loan. Will you please enlighten us, be our fountain of knowledge?
Absolutely. So the none people, I'm sorry to tell you, you are incorrect. We do offer a discount on our fixed rate home equity loans, only fixed rate, not variable. Now, we do not offer a direct deposit discount on them. I'm sorry to disappoint, but either the welcome aboard discount or the loan loyalty will get you 0.25% off of our best rate. It's one or the other. The maximum discount on a fixed rate home equity is 0.25%, but yes, I'm very happy to say that we do offer a discount on our rates to either our newest members with the welcome aboard who are just getting into the credit union. We offer the discount to you. And then of course, loan loyalty is for our most loyal members who have multiple products with us. We want to make sure that we're recognizing that as well. So great question and great answers.
Correct. Yeah, it's nice to know that this credit union takes care of their member owners by allowing them to have a discount. Some places don't have any discounts at all. So good opportunity for those that are not members owners yet. They're thinking about getting a HELOC. Hey, there's a discount that can help you out with your cash flow. Okay, Emily, back to you.
Wonderful, wonderful. Okay, moving on. Let's talk about how to apply. So you are going to want to sign on to your online banking profile. Select apply now. You'll choose credit cards and loans. From that, you'll choose home equity lines of credit, and then you'll choose the type of HELOC that you'd like to apply for. I know we've covered a lot today, and there's a lot of options when it comes to the HELOC product. Don't worry about it too much. We can always change it on the back end once we get the application. So choose the one that you feel fits you best, and after speaking with your loan officer, if you decide maybe you want to try a fixed rate instead, or you chose non-Texas and you're in Texas, we'll get it fixed. It's not an issue at all. Things you'll need to know in order to apply. You'll definitely want to know how much money you're interested in borrowing. We'll need a reason for the loan. Very general reason is fine. If you can give us the estimated property value, we are going to pull our own value. It's really just to determine out of the gate if it looks like we're going to have loan to value issues. Just give us your best estimate as to what the property is worth. We'll also need to know, of course, how you intend to occupy the residence, if it's going to be a primary residence or a rental investment second home. You'll need to add the balance of your current mortgage, so that also helps us figure out the CLTV. And if you have a second mortgage on it already, we'll need to know that as well. We are only able to be in first or second lien position, so if you do have a second mortgage, we will have to pay it with the proceeds of this one. All right, so the documents that you'll need to apply. We mentioned much earlier in this presentation that these loans can be a little document heavy. For most applications, we're going to ask for 30 days of pay stubs. If you're semi-monthly, 2 stubs, bi-weekly, we'll need 3. If you work monthly, if you're paid monthly, we'll need 2, just to make sure we can show consistent income. We'll need your most recent year's end pay stub or your W-2, your current mortgage statement. We'll need your homeowner's insurance policy, property tax statement, and if you have an HOA, we'll need a statement from that as well. We have some less commonly requested documents listed on here as well. They address things like self-employment, divorce, rental property, just a variety of different scenarios we run into. So take a look at that at your leisure, and your loan officer will certainly talk you through it and ask you for the documents that fit your unique scenario. So now that you've got your documents in, we have everything on our end. I'm going to walk you through kind of the life of our application process. As I mentioned, we've got 30 to 45 days here. We're running a little bit behind that due to the influx of applications that we've had over the last few months. 45 to 60 days, again, is closer to the actual processing time right now. So, of course, we're going to start our process with your application. You'll start your application either online, over the phone, or in person. You can also do it through your mobile device. I tested this the other day. It took me about 3 minutes. It's very, very concise and quick. So hopefully you won't find the application too burdensome. Once we get the application, your loan officer is going to request the documents that we need. That's when we'll talk about any unique scenarios that require additional documentation. You will, during this time period, receive disclosures. We send them out. They're very general. They're sent via DocuSign. There is no signature requirement on them, so they're there strictly for your information. You will get much more detailed documents that speak specifically to your loan closer to the closing process. So once you get your disclosures, your loan officer is going to be working on processing the documentation that you sent in, getting everything in order, seeing if we're missing anything. If there's any additional questions that come up, so they may request additional documents. Once they have that loan documentation complete and it's credit approved, we're going to move it to our closing department. Our closers do quite a few things. They order your title report to make sure that there aren't additional liens on your title. They're going to order a drive-by appraisal to make sure that the home is in good, livable condition. If it's owner-occupied, they're going to make sure that there is someone in the home. They're also going to verify employment and do a full review of your loan before they call you to close. When they call you to close, they're going to review your loan with you top to bottom, make sure you're comfortable with everything. It's a great opportunity to ask questions. Our closers are very, very knowledgeable. Then they'll get you set up with that notary or attorney. We'll meet with you, sign the documents, and then our loans fund 4 business days after you close, and that's when the funds will be available to you.
Hey, Emily, what do you think if we have Jack jump in and show us on the website the home equity line of credit page and stuff like that, so people can familiarize with our products through our web page, and maybe you can talk about it a little bit?
I love that idea. That's a great idea.
All right. My folks out there with the webinar, this is Jack Moore. He's the Western Regional Manager for our business development team here, and he's going to be sharing his screen with our loan, mortgage, home equity line of credit itself page. Thank you, Jack. Go ahead.
Thanks, Butel. And if you don't mind, Emily, pass me the presenter ball. I'm glad I did my hair today. This is improv. Want to look good for everybody out there in webinar land. As soon as I get the permission to share with y'all, I will. There we go. All right. Thanks for your patience on that. I think this is the right screen. Hopefully we're all seeing our credit union webpage. Can my teammates confirm with this? Correct. Yes, excellent. Okay, so with me here. So basically, I went to American Airlines or aacreditunion.org webpage, and I clicked on borrowing and went down to home loans. What I want to show you all on this page is that not only can you look at information about mortgages, things like that, but if you scroll down a little bit, there's an opportunity for you to learn a little bit more about our HELOCs. So as you see here, there's the owner-occupied homes and the non-owner-occupied homes. I'm going to click on learn more about owner-occupied homes because that's a majority of what folks need. There's the apply now button. I'm going to open that in another tab. We'll come back to that. But if you scroll down, a lot of the information that Emily talked about in our presentation and that Butel pointed out is contained here as well. So Butel mentioned earlier that if you need a copy of today's presentation, because Emily did cover a lot of information, we'll send that to you. You just have to indicate that on the survey. We'll send it early next week. But if you're chomping at the bit, you want to explore on your own, there's information here about fixed rate home equity lines of credit, both in Texas and for those of you outside of the great state of Texas. There's information about variable rates as well. And then what I want to point out, because we did have a few questions on this about rates, what you can borrow and your loan to value and things of that nature. A lot of that information is actually on our rate sheet. So I'm going to point a lot of y'all there to do some investigation. There's two ways to get there. First of all, if you're on our webpage, you can always click on rates over here, and that'll bring you to all of our rates, including mortgages, home equity lines of credit, auto loans, etc. And if you click on home equity line of credit loans, it should bring up this page right here, which is HELOC rates. Now, Emily talked earlier about finding the right home equity line of credit product. That's something that a loan officer can certainly help you out with. But if you're looking to do a little bit more investigation on your own, that's where you can find this. Again, combined loan to value is here. The rate that you might be able to get, or the range, is in the next column, and the APR is in the far right column. Just a quick little note, APR is a really important terminology, more important than rate, to be honest with you. APR encompasses the entire cost of borrowing. So you'll notice on a lot of our home equity lines of credit that the rate is the same as the APR. You may not find that on a mortgage, because a mortgage includes all the costs, the closing costs, all the total fees involved in getting a mortgage, for example. So anyway, I just want to point that out, just as a financial tip. If you're comparing loans, always look at APR. Do not look at just rate. So the other thing I wanted to show you, so that's how you can find the rates. Let me go back. The other way, obviously, is there's the link at the bottom of the HELOC page that'll allow you to link to the rates. The other thing you might remember is I clicked on Apply Now on that home borrowing page. And this will be a really easy way. Emily pointed out it's even easy through the phone or through the app or anything like that, and it'll look very similar. But if you're not a member, you would click Become a Member. Butel will talk about that at the end of our presentation. But if you wanted to apply for the home equity line of credit, you're going to click right there, and it'll bring up an information page for you to start documenting the type you want, where you're at, et cetera, et cetera. And for the sake of time, I'm definitely not going to go through this whole process, but just a little heads up, a little example of how you might be able to find that information. Butel, Emily, while I have it up, is there anything else you want me to point out or give to our audience so that they can take advantage of their first time home equity line of credit?
I think you covered it really well, Jack.
Yeah, all I want to say is please don't feel intimidated by all those numbers when you look at the page or all the wording and everything else. We're here for you guys. Remember, you're member owners of this credit union, and we want to make sure that we walk you through every single step. So again, feel free to go in here, like Jack said, do your research, look out for it, get some knowledge, and then always the subject matter expert, whoever's helping you with this loan, is going to make certain that you're really aware of all details. Thank you, Jack. Again, for sake of time, we're going to move forward. Thank you for showing us that.
You got it. Let me give the power back to Emily here.
Thank you, Jack.
Thank you. Okay, like Butel said, we've covered a lot here. These are fairly complicated loans. There's a lot of layers to them. So I just want to reiterate what he said. We're here for you. We have really well-trained loan officers that can answer your questions about these loans and really walk you through the process. It can be a little intimidating, especially if this is your first time, and we want to help you. So please feel free to reach out to us. The contact information's here. And with that, I will turn it back over to Butel.
Correct. Just to, we're going to do some public service announcements or credit union information for those out there, and then we'll get back with Emily, our subject matter expert, in reference to some other questions that we have in the queue. I know Jack and the others have been answering a lot of them, but I just wanted to make sure that you're all aware of the number. Like she says, we're here for you guys. So I'm going to move forward with the page, and I'm going to talk for a little bit. Again, it's for the benefit of those that are member owners or thinking to becoming one. So here we have what we're calling the financial first, and it's a beautiful background and everything else. So what is about? What is this about? So let us be your financial first, reviewing, let's say, your credit card. If you look in your wallet, and you probably heard that at some other commercial, but I'm just saying that, what credit card you have in your pocket. Compare the rate of that credit card, and a lot of individuals do not really know the rate that they're paying on their credit cards. They just have a credit card. So our credit cards can be as low as 8.5%. Usually credit cards are at 23, 24, it all depends. And most people carry a balance. They don't pay it off at the end of the month. So you may want to let us be the first one to review it and see if we're able to help you out. If we're not, we'll be honest and we'll tell you, look, we cannot beat whatever you're getting. Or the same thing with your car. A lot of people have vehicles with double digits rates out there. And when they come to us and they talk to us, we're able to help them out, bring that rate lower, which it makes the payments easier, which it also allows them to use that equity or money that they were able to get from that car if they decided to take money out and either invest it in an emergency fund, pay something else at a higher rate, make sure that their financial wellness is taken care of. That's what we're looking for. Let us be that first person to, if let's say you have a baby, help them create a savings account for his future financial needs. Again, we're here to make certain that we are the first one looking at this. We are non-commissioned. We don't get paid extra for doing none of this. To the contrary, we're doing it because you as a member owner deserve the best rates out there. So again, this is just letting you know that we're here for you guys. So let us know what we can, even your educational loans, we can help you with those as well, probably to help you restructure the financing of those. And we're going to move to the next screen, which is basically like Jack mentioned, I'm going to cover that we're here for you all, of course. And while many of our products do not require you to be a member owner, all of our loans and savings products require a basic membership with the credit union, which is the savings account. It's what we call the umbrella account. And after you have that, everything else is available for you. So if nothing else, consider opening a share savings account. That way you can get to know the benefits of the credit union as a member owner. And during this presentation, we want to make certain that if you use your phone and you scan the QR code on the bottom right, it's going to take you to our sign-on page to become a member. I believe Jack pulled it up, apply now. And when you're answering the questions, the branch, the information, and you get to an area that says promo code, please make sure you enter BD, B as in Bravo, D as in David, 4412. What we will do is we'll credit the first deposit into your account. It's not a lot, but it's the first step to success. So we'll deposit $6, so nothing to lose. Open the account. Once a member, you're always a member for life, which it means if you are to leave the air transportation industry, you decide to go and work for the city, you decide to work for another private institution, you can still become and stay, you can still stay a member of the credit union. Once you leave, you close your membership with the credit union, it could be harder to get back unless you are in the air transportation industry. So keep it, take advantage, compare with other banks you may have or other credit unions, and see who provides you the best benefits. You can also join online, as it shows here on the screen. You can join calling us our 800 number, or if you are at the airport and you see a branch, walk in, say hi to them. They're more than gladly to see you walk in and reach out for membership to them. Or you can always email us at weworkforyou@aacreditunion.org. So to make things a little easier also for you guys out there, as I mentioned before, there's different uh, specials going on, or promotions, I should say. Uh, so let's say you are working with us already and getting a new mortgage, and you are approved for the mortgage, and you open at the same time a new Platinum Rewards card. You could get up to 60,000 points or connection points, and the loan officer will be able to explain that to you with more details. The same thing if you are here and you decide to let us look at your loan, car loan or auto loan, and see if we can correct or minimize the rate that you have. It could be as low as 1.9 annual percent rate. Plus, we will allow you to defer the payment for the first 90 days. So again, it's one of those things that we will allow you to do that. And the same thing if, let's say you have a car with another brand financial institution, let's say Toyota, just to say that, and you bring it over to us, let us see if we can lower the rate, the payment, and we will also allow the 90 days. For those people that are joining us or will join us as new members or that only have a savings account, take advantage of opening a checking account, because for the first $25 you spend as a purchase, not going to an ATM and taking money, the first 25 within the first 60 days, we will give that back to you. So again, it's one of those things that there's a lot of promotions going on. I want to make sure that you all are aware of this. And if you want to know more about our promotions, go to our credit union, aacreditunion.org offers, and that way you all can take advantage of that, those that are members and those that will be future member owners as well. This is here for our current members that are out there and they wonder, so what's in for me? You know, so hey, it's simple. Refer a member. Give the gift of membership to your family members, to your grandkids, to your kids, to your sister, to your mom, to anybody living under your household, to anybody that is probably working with you in the air transportation industry. Look to your right, look to your left. You know, you probably heard somebody, hey, I'm looking for a car and I want to finance it. Hey, maybe they can take advantage of you. So you refer them. The account gets open. You get $25 for each account that is open. That's up to 10 a year that you can refer, and that's $250, especially now for the holidays. It could be an easy $250 that you can bring into your pocket by referring the members. So what we're going to do now is we're going to go back to the information page for the home equity department, and we're going to answer as many questions times allowed. So feel free to continue dropping your questions there. So Emily, are you ready for a quick shootout here? Okay, so let me open here. All right, so we're going to start here. Can you use the home equity line of credit to purchase a second property?
Yes.
Any type of property, a condo, a house, a duplex, a triplex, whatever it is?
Sure. We have members that use the equity in their homes for all kinds of things, certainly investment properties, vacant land, building their dream home. Yes.
Okay. So the next one is, this is a bit more detailed. This individual lives in the, like Jack said, the great state of Texas. Their house is paid off. And I believe you covered this a little bit. It's valued at $200,000 and it's interested in remodeling. They would like a fixed rate loan. How much could they get as a HELOC? And you explained it before on your example. And at what rate? Do I have to get an appraiser or do I have to pay for that? What other fees will I incur?
Okay. So we don't run into this very often with a paid off Texas First, but there's an additional rule in Texas that gets on our more advanced home equity presentation. So you can take 50% of your equity in Texas as a HELOC in a first lien. So you're capped at $100,000, which is actually great because if you go over $100,000 in a first lien, it does start to incur some closing costs. So at $100,000, your rate would be determined by your credit score and the product that you choose, but there should not be any costs associated with that loan, assuming we're able to pull a value on it. You should be in good shape.
So, Emily, I appreciate you bringing that rule in, because the first thing I would think by listening to you is I could go 80%, so I should be able to get 160. But in order to avoid any fees, as you mentioned, the rule of the 50% works in very greatly. I mean, 100,000 should be a pretty good amount of money for a good remodeling in house. So I know that our people answering in the back referred it as an 80%, but again, appreciate that Emily was able to bring the rule of the 50%. So both answers are within guidelines itself. Let's see what else we got. Why do people get home equity loans? What is the most common reason?
So right now, the most common reason is home improvements. I think since COVID, we've seen a huge boom in home improvements overall. So I would say that's the reason right now, but members borrow for all kinds of reasons. This time of year, we get a lot of requests for school tuition. Some of our members that are contemplating retirement want to borrow funds to buy that second home or their retirement home to get set up for when they retire. So everybody has their own reasons, but it's a nice product. It's very flexible, so it's able to address a lot of different member needs.
Good. Let me ask you something out of random. Can these funds be used to purchase an airplane?
Sure.
That's nice. Very good. Or to put a pool in your house, right? Especially like you said, everybody's been. All right, let's go to the next one, Emily. Thank you again. You know, what if the home is in a trust?
So it needs to be in a revocable trust. It can't be non-revocable. But we do loans or homes in trust all the time. That would be one of those extra documentation requests. We will ask for the full trust so that legal can review it and make sure that our lien will be able to be added.
So better just to call in, make sure that you have a conversation with a subject matter expert in reference to this, and that way we know exactly what we can do for you within the trust itself. All right, let's see what else we got here. It says, so we have, would you explain or re-explain the interest rates, or would this be, well, that will, yeah, this is being recorded, and we'll talk about that in a couple of minutes. The individual was not able to write fast enough, and there's a lot of information. So will you re-explain the interest rates that you covered earlier, please?
So are they looking for specific rates, or how we determine what your interest rate is?
The latter part.
Okay, that's easy. So to determine what your rate is, we look at a few things. We look at the CLTV, the cumulative loan to value. If it's less than 80%, or 80% or lower, it's a more favorable rate than if it's between 80 and 90%. That's one factor. Another factor is your credit score. That will help determine rate. The third factor that we look at is the term of the loan. So if it's a 10-year amortization, it will have a more favorable rate than a 15-year amortization, but of course that 15-year amortization will have a more favorable payment. So it's really looking at your specific circumstance to determine what is most important to you. Do you want that lower rate, or do you want a lower payment? Do you want to borrow more of the equity of your house, or do you want to keep it under 80% and get the lower rate? You just sort of balance those things to determine what scenario you want. But those are the three factors we look at for rates.
Nice. So we have here, because I believe there's a fine line. So is the HELOC considered a second mortgage? I don't believe so, but it is?
Yeah.
Oh, it is. Okay. Thank you. Thank you. Again, one of those
mortgage,
things.
Yeah, it's nuanced. Really, a second mortgage is the lien position on your title. So if you have a mortgage, a HELOC as a second lien is a second mortgage. They can also be first mortgages if you don't have a lien on your home at all, like the first question.
Oh, okay. Jack has a question. Jack, jump in, please.
All right, I got. This is honestly, y'all. I'm an attendee just as much as I'm a host here. I'm learning so much, Emily. But I know I've been asked this in the field whenever I'm visiting with members, and I've got the question too. I think I know the answer, but let's say I go through the process of getting a home equity line of credit. I've got $50,000 sitting out there for me to use. Do I have to? Do I have to use it? Do I have to pay interest on it? What if I have a 5-year draw and I don't use it? What happens then? If you don't mind just talking through that, and then I think Butel will bring us home.
That's right. We got one more after that. Yes.
Sure. Yeah, we have a lot of members that like to have home equity loans in case of something happening. You know, there's those large expenses that can really catch you off guard. You have to replace your roof, your air conditioner goes out. People like to have that line in place in case of emergency, and that's one of the big advantages of this line. There is no annual fee on this. When you're comparing apples to apples, you'll always want to ask another financial institution if they charge an annual fee to maintain your home equity line of credit. We do not. So if you, Jack, did take one out today, and in 5 years your draw period closed and you never used it, it wouldn't cost you a cent.
Good. Thank you, Emily. So, Emily, I know there's a lot of people now interested, like we see here in the Q&A, and we only have a website and phone numbers. Can they go to a regular branch and apply for this loan, or what is the process? And also, I understand that there's a lot of our member owners that don't necessarily have English as their first language. Are there individuals that can assist them as well?
Absolutely. Yeah, we want to make sure that we offer all of our products to all of our members. So yes, we have Spanish-speaking loan officers. If you have another language, we will try to find someone at the credit union that can help us take that application and get it processed. But absolutely, branches, all of our branch loan officers are trained in home equities. Some of the more unusual scenarios they may not be as well versed in, but they've got a direct line to our home equity center, and we'll get you all of the answers that you need.
Correct. I personally know that we have, like Emily said, second languages like Spanish, French, Hindi, Arabic. I mean, many individuals within the credit union that can help with that. That being said, it's 12:31, Emily. So I just want to make sure that out of respect of our member owners' time, that we make certain that to thank them again for tuning in, for those that are coming back, and for those that is the first time. Remember that if we didn't get to your question, or yours is more in a personal nature, we'd be more than happy to reach out to you. Just indicate it on the survey that you're going to be getting shortly after we close this webinar, and we'll get a credit union representative to contact you next week. Make sure you check out our AA Credit Union page for the events every Thursday at 11:30 Central Standard Time. We have a topic, something that is very important and that we will also appreciate, and we can answer one of the questions or make certain that they're aware of, is to please follow us on Facebook, Instagram, Twitter. But somebody was asking if this was being recorded. We are now in YouTube. So make sure you like, subscribe, and make sure you smash the like button, that what we're doing for you guys is for a benefit for you. So on behalf of Emily, Jack, myself, Sarah back there, Lacey back there, I mean, we got people everywhere helping out. We want to say stay healthy, stay safe, be happy, keep enjoying life. And Emily, would you like to close us out?
Oh, I just want to say thank you to everyone for attending. This was such an exciting opportunity to share some information about my favorite product. So thank you, and I hope to see your names in our queues.
Thank you again, guys. We appreciate you all. Take care. Signing out.
Bye.